Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to unpack a lot of different subjects. We had really an active news cycle during the U.S. pre-market. We also had earnings out yesterday for Tesla. We're going to show you a key supply zone that's coming up fast for Tesla. Talked a little bit about maybe buying it according to that 5,200 crossover. That would have been a good play, but Tesla is definitely in the news, and it's rocking higher by 20% today. Euro USD, we're going to look at a 9 EMA 5-minute trade right off the bat. We're also going to unpack the Bank of Canada and what happened yesterday. And, of course, we've got to start with gold. Yesterday, we sort of came out with a trade idea after the live stream a little bit later in the day, and it was basically very, very simple. Buy gold at market. Buy gold at market from about 2015, really looking for a retracement off of our key level, and boy, did we get it. We got it in a big, big way. So you can see, I'm going to go to the chart here in a second, but you can definitely see if you're not familiar with our trade ideas, we got a key level there, would have been your entry, and your next level would have been your profit target. We hit this one. We hit this one easily. Mark Corp, good to see you. Yeah, let's go ahead and see if we can find a Bollinger W there on the 5. This is gold right here. This is gold. I thought that we had really a great trade up there in a major sell-off, and now you got the bounce off of that 27.12 area. We had a 15 buy-in play, which was the trade idea, and boy, did that one perform well. We saw a nice big rally right back up to 43 again, and now we're starting to see a little bit of compression. So, we don't spend much time on these streams patting ourselves on the back because as traders, it seems like one step forward, 2 steps back. Sometimes we hit one and then lose one and then hit 5 and then lose one. So it's always one of those things where you're very, very cautious about getting into the market and saying, okay, I nailed it. This was an area that we thought was going to be important, and there's no question about it. 2750 is important. Now, as far as where we go from here, personally, I'm still very bullish. I think today's price action really shows you that if you're going to pick a side, if you're going to be on the side of the metals, you've got to be on the side of the bulls. You've got to be a bidder here. If you're not bidding gold and silver, you're losing. I'm sure that there are some hedge fund guys out there that are getting crushed with this, but there's no joke and there's no kidding. We're not done going up yet. The real question is, as a retail trader, how do we get location? How do we get involved? And be able to capitalize on what most of us believe will be a rally towards 3,000. Now, we crunch this daily chart down. 3,000 is going to be the next port of call after we break 2750. There's no question about that. The only question becomes right now, how long does this 2750 contain us? How long do we stay bullish? And is there anything that can bring us off? So that was a great trade. Anytime you see at market with an exclamation point, that just means buy it at market. That's a market order. Get in there. Get in there because you don't want to miss the move. Pretty darn good trade, guys. Pretty darn good trade. Got the nice rally. So we did have a comment there in the live chat. Let's see, a 5-minute Bollinger W. Once again, my brackets are going to be just a little bit different. So if we were going to look at that Bollinger W here for gold, let's just go down. I've got a template. We'll go ahead and just pull the template right here, and then we'll get gold going. Where are we at? 5-minute W. Well, a couple ways to look at it. I think this one we probably got faked out on. It would depend on where your stop loss was. Clearly, this is a move. So you'd say that this is one big move. You got an outside there, but you didn't get that second outside. Right there's going to be your first bottom. Okay, that would have been your first bottom. Clearly, there's your pullback. This isn't a pullback. This is one big candle and then a doji and then a hammer. The pullback, I guess you could have bought right there, but that's not a second low. That somewhere right in there is a second low after you get that nice pronounced pullback. Now, if we would have had a couple more price bars down in here, then I would have said, yeah, go after. But remember, guys, the crux of this is going to be the W. Boom, boom, boom. That's the W right there. Yeah, you're probably buying right there. You're probably getting in right there on that candle. Now the question becomes, okay, Shane, where's my stop loss? Well, if you played it tight and your stop loss was beneath the second low, you got stopped out and the market reversed. If you played it a little bit bigger and put it beneath the pattern as a whole, then you're still alive and you're making money. So for me, I always say, listen, if you want to play it tight, make sure that you give yourself enough room to work. All right, 5-minute chart, you probably should have been going down beneath the pattern as a whole. And if you did that, right there is going to be your buy. That's going to be your big green candle. You'll notice that body. That's a formidable body coming off of a doji. I would say that would have been good enough to buy. You'd have bought right there, and you're still going long unless you cut it off beneath that second low. Good eyes, Mark. Good eyes. You're absolutely right. So a lot going on there. Now, how is our trade location? For me, my trade location is not very good because we already bought I mean, we're up at 27.35, but we bought way down here. So, the battle was never really fought for us. We already were in and out. The question is do we go higher? Boy, I would keep a real eye on that 27.50 area. Do I want to sell again up there? I don't think so. I think I would wait and see what happens here. But if I did sell 27.50s, I want to make my entry point is going to be 27.49.5, somewhere right up in there. And that's absolutely imperative that you understand the difference between the first trade idea where we were selling 27.45s. Right now, that area is becoming saturated, guys. Everybody in the world's traded it. I want to make sure that I get good trade location and a good risk versus reward trade. Probably be selling 27.49.5s right next to that 27.5, and then we could look to really get in there and maybe hammer about a $2.50 trade. That's a scalp. That's a true scalp right there. Limit your risk. Don't get taken to the cleaners, and you'll be just fine there. So definitely want to start out with covering gold, and then, we got to talk about the other big story today, and that's going to be your Tesla. Now, Tesla is on absolute fire. It's on absolute fire. It's a huge, really just what I would say is one of the bigger moves we've seen out of a stock in quite some time. Now, I know that they happen every day, but not with something with the notoriety of Tesla. Tesla's in everybody's mind right now. A lot of that's because of politics and Elon Musk. Well, yesterday was the earnings call. Bob, good to see you, Bobby. Tesla says Cybertruck reached profitability as quarterly earnings beat estimates. Has anybody seen one of these things? I saw one of these things the other day. I've only seen a couple of them here. Not many of them in Montana. Usually we're talking about gas and diesel. Not too many electric vehicles up here otherwise, except aside from in the cities. Really no place to charge them, at least where I'm at. But take a look at this thing. Looks like a spaceship. I saw a couple of them, and I went, wow, that's something. In any case, what's big about these is they said the Cybertruck reached profitability, which is surprising. I don't think anybody expected them to make money on the Cybertruck just because it looks like a spaceship. I don't know that that's there for mass marketing purposes. I don't know how attractive that is to everybody. But the bottom line is this: they came in at $25.18 billion. 8% year on year. That's pretty good revenue wise, and that's exactly what drove your rally in Tesla. And you can see right here. This supply zone. This was something I put out on X earlier today. Always remember, markets have a memory, especially if you're trading stocks or definitely Forex, because the markets are so big. But markets have a memory, and you see this area that started really right back. We could even go back further, perhaps to October of 2023. But I think this is pretty good. December of 23. And look at what you got here. Got a pretty clear-cut supply zone. You got a nice spike right there on the 11th of July, 2024. And then you also got something cooking right there. So I would say that if you're long Tesla, and take a good look at what happened here, guys. I sort of recommended bidding yesterday ahead of the earnings, thinking that you might get a little bit of a pop back up to 25, this gap area right in here. And boy, did we fly the coop. 25.57. We're up 20-something%. And rocking and rolling. So I'm watching that closely. If you got in on that Tesla, well done. I think that it was a great trade. And just sort of this is going to be a bit unconventional, but we were talking W's. Take a good look. This is what the W strategy was built for. It was originally intended for stocks. This is John Bollinger's traditional perfect W strategy, which is picking a double bottom. Well, it ain't pretty, but right there's your first bottom outside of the Bollinger Bands. Pull back inside. Second bottom. Do we have a big candle? Maybe one of those two. Bought it, got a big sell-off, but since then, it's been pretty good. So what I would say is we're in an interesting type of a situation there with Tesla. I think that if you're a long-term investor, there wasn't many people I knew that were selling out of their Tesla. Been a ton of political pressure on Elon Musk, though, because of his affiliations with Trump, and it's been a lot of pressure on Tesla, no question about it. Okay, let's go to the Euro USD. We want to go see if we can execute a 9 EMA trade during this live stream. I'd love to do this live because I think it's going to be a pretty good trade. You'll notice right there we are using RSI confirmation. So we've got RSI confirmation. We've got the Euro USD on the 5-minute chart, really driving much, much higher above that 9 EMA. All right, so what do we want to get done right here? Well, we're looking for a situation where we're in overbought territory with our RSI. We're above 70. We're looking to sell this market. Now, the market is rallying on the 5. In order for us to sell this thing, we're going to have to get a real nice close beneath our 9 EMA. It may or may not develop here in the next, however long we're on, but I'm definitely watching this. I want to get this executed. Just remember, it's a very, very simple way to trade. We're looking to confirm that we're in overbought territory or oversold. We're above 70 down there on our RSI. Take a good look at it. We're clearly clearly in overbought territory. What we want to do now is get a sell signal. And what is it? That 9 EMA. That's sort of the golden goose. That's what gets us involved. We get a bearish close, a 5-minute bar that closes beneath that 9 EMA. Then we're going to trade it. One last thing I want to point out, and then we're going to get on to the next part of this thing. But right there, you can see right there, we were in overbought territory, and that was back at about 7:30 a.m. today, my time, 9:30 Eastern, right around that ding cash open. There you go. So what do you got right there? You got an interesting trade, don't you? You would have had a sell. You would have sold right there, okay? This is why I recommend always putting your stop losses above that previous swing low, above the previous swing high or below the previous swing low. Stop loss locations, everything if you're going to be trading something like this. So right there, you would have sold, and you would have got a little bit of a move, and then it would have went against you, and then it sort of would have went in your favor again. So you'd have still been a net short here, and now you would have just got stopped out unless you took profits down in here somewhere. Your sell would have been right there on that close. That close would have been 108.02, and then your low, well, I mean, theoretically, your best low right there was going to be 107.94. So you got a few ticks there, and your stop loss to the top would have been 108.10. So very, very tight trade. Very, very tight trade, but you could have built that for a 1-to-1 and got paid. So just think about what you want to do here with some of these strategies. Right now, though, we are waiting for another sell. We're in overbought territory. We just need a bearish close beneath that 5-minute 9 EMA, and then we're going to be all over it. Trade day every day. Hi, man. How's your day going? What do you think about WTI? Yeah, that's actually going to be probably our next port of call here is going to be the WTI, and then we're going to talk a little Canadian dollar. This is the WTI market right here. There's no question about it. Everybody knows it. Anybody that won't admit that is the crux of the WTI market right now and what's driving price is really, really nearsighted. This is one of those things that I think you're going to see really begin to put some pressure on your WTI crude oil market. Now, you'll notice the presidential election winner it's still very, very much up in the air. We don't really know where we're going. We don't know. There's a ton of news stories hitting the right now, October surprises. I saw some things yesterday politically come out of the White House and the vice presidency that I've never seen in my life. Very incendiary rhetoric from both sides, but this is an interesting situation. You can see the reason why I keep referring to this poly market is you've got about $2 billion in volume. That's absolutely a staggering market. That's a big market. That's probably the biggest gambling market in the world right now. And you see right there, what do you have? Well, right now bettors are about 62.38 that believe that Trump's going to win this thing. So I typically lean on betting action more than I do polls because pollsters, I mean, their reputation is based on, getting things right, but the bettors, that's their wallet. They vote with their wallet, and that's absolutely important. So when we see something like a 60 or a 62.38, what are we supposed to think about crude oil? It's very simple, guys. A Trump win means you're going to have lower crude oil prices because that's going to be a prime directive. That's going to be one of those things that you're going to want to see, that you're basically building your entire administration around. Everything's going to be predicated upon driving energy prices down dramatically. That's the idea. And if, in fact, you can do that, if you boost, and it's not just about boosting production and fracking more and all that stuff. I worked in the oil fields. I was there. I was on an oil rig at 3 o'clock in the morning outside of Williston, North Dakota. I was there. I saw what it was back in the boom days right around 2013. And I can tell you that it's not just about drilling more holes. They say drill, baby, drill. That's part of it. The fracking, the technology's there. Long-term implications of fracking environmentally, God only knows. I can tell you that was an interesting scene. What I will say is it's all about the pipelines. It's about the pipeline projects that are going to deliver more of that crude oil to your markets. That's it. It's things like the Keystone Pipeline. It's more projects. They said there's about 3,000 to 5,000 smaller pipeline projects that have all been mothballed. And they've been done so under the guise of environmental protections, and that's fine. What that is an administration committing to a certain way forward. All administrations do it. Trump's way forward is going to be get more oil to the market, drive energy prices down, and that's basically how they're going to try to attack inflation. Will it work? Who knows? I think the inflation's already entrenched. It's going to take a long time to bring prices down if it ever happens at all. On the other side, Harris, we know that that's the transition to green energy, the transition to things like solar power, things like electric cars. We've gone through the mandates, Project 2030 in California, where half or all vehicles have to be electric by 2030 or 2035. That's the kind of thing that we're going to be looking at under a Harris administration. So when we sit around and look at crude oil and we look at natural gas, we say, okay, one's a bearish market driver, one's a bullish market driver. In my opinion, that is the entire game facing crude oil right now. Now, people can argue with me and say, well, what about Israel, Iran? What about all that? And I would say, yeah, those are great market drivers too. Of course, a huge Israeli strike on Iran would spike crude oil through the roof. It really will. Also, you have a situation where we have seasonality. We're now pricing December crude oil. So when we're talking WTI, we're talking, triple-pronged attack. We're talking elections. We're talking geopolitical uncertainty, and we're talking seasonality. Two of the three are bearish right now. That could easily flip the script and be bullish. That's why we're starting to see, look at these daily ranges, tight, very, very tight stuff. Yesterday was extremely tight. Take a look at what happened today, though. You had sort of a fake auction, or a failed auction. We broke out above our weekly high, which was established Tuesday, 72.06, and we posted about a 72.30, and now the reversal's on. Well, what do we have down here? Now, I'm not necessarily a trend line trader. I don't do it. I know a lot of you do. A lot of you do, and that's great. If you're trend line traders, go get them, Tiger. Be tough to ignore this one, though. Now, this is the U.S. Oil CFD. This is going to resemble a continuation contract for futures, all right? So if you trade that continuation contract, this is what your chart looks like, and that's because of the way that they merge the pricing with rollover and contract expiration. That's complicated. We're not doing that today. But here, spike low, 10th of September. What is it? 65.29. Now, this spike right here, is this a perfect trend line? It's not perfect, but I'm going to allow it. The reason why I'm going to allow it, your low down there, 66.36. What is this right here? 65.29. It's still not much lower than our trend line, which kind of blows through there at 66.73. I would call that close enough for me. And remember right there, there's your low. Where's your low right there? 68.19. So if you're a trend line trader, take a good look at that trend line on the daily. That's important. What do you have right there, though? What would this be? Right now, today, it's going to be 68.50. Of course, you want to buy that if you can get it. We're not going to get that today. How about tomorrow? 68.80, somewhere in there. And then the next day, 69-ish. You see what I'm getting at? I would be watching this trend line very closely. Now, if in fact you wanted to do something else and say, okay, well, what do you want to do, Shane? I'd say, well, let's throw Fibonacci right there from our trend line. Spike low, spike high, pull back. We hit 62% beautifully today. 69.76 was the bid. That was fantastic. That was one of those things that, you know, if you got it, great. If you didn't get it, well, that's life. Get ready for the next one. 78%'s down there at 69.07, something like that. So let's say we have a tight couple of days. You're probably going to get a little convergence between that 78% right around 69. I would be a bidder down there. I would be bidding 69.25. I think that's probably a pretty good way to attack crude oil. Now, as far as your intraday action goes on this U.S. oil chart, you have compression. You tried that 62% down there, right around 69.76, right in that vicinity. What was your low? Your low there was 73. You bounced right up, came back down, and we're in that vicinity again. Until proven otherwise, I would be bidding 69.75 for the rest of the session. Until proven otherwise. Now, here's the other thing I would say, and I'm just going to do this off the top of my head because this is one other thing that I like to do. If you've been looking at those bars at the bottom of my chart, you'll notice that that's an ADR. That's an average daily range. So if we go to the daily chart and we look at my ADR and it's 258, that means that we're expecting a range of about 258 today, 258 ticks. So if I look at 258 ticks or $2.58, my high's up there at 72.29. What am I really looking at here? Well, $2 off of that 70 and another 50 cents off of that 58 cents is right around what? 69.75. We're about at the end of our daily range. I don't expect us to crack that. If you get another shot to buy it, I think you can justify buying it. So that's what I would look at day trading wise for U.S. oil. I like that one a lot. I think that that's a pretty good trade. There's been a couple good ones today. If you're trading WTI crude futures, that was sort of my warp. that's my screen. That's what I'm looking at. Every one of those lines means something and all the Fibonacci's and things. Let's go ahead and get rid of all of it and make this easier. Daily chart. Once again, you'll notice that our trend line is a little bit different for this one. The prices are going to be different, but I still would stick with it. Going back to that November 10th low, you can see, and I'm just painting with broad strokes here because we're moving fast. Take a good look at that. Where's your trend line? It's right in the neighborhood. And remember, if you're going to trade these exactly, I'm just sort of pointing out where to put these things in broad strokes. Something like that. What is it today? 68, 65, something like that, 68, 80. I'd keep an eye on those trend lines because remember, when trend lines typically act as support, all right, this one did. If you just connected these 2 points, you connected them perfectly, you'll notice you didn't get a trade. But this one right here, I blow it right through there because it's just a few cents. For me, I think you got a pretty good opportunity here to buy a dip for WTI crude. Now, as far as selling, I'm not interested in selling just yet, although it does look like we have some bearish market drivers. If, in fact, you wanted to sell this thing, you probably would be going to a weekly chart. I just think you missed. Went right up to 38%, 71, 78-ish. So we've got a little bit of symmetry in this WTI market. One last thing I'm going to say about it. What's yesterday's low? What's last week's low? 68.17. If you're trading WTI futures or if you're trading your WTI contract, be very aware of that. Very aware. Remember, a lot of traders play the middle. And what the middle means is you're going to buy in near lows and you're going to sell in near highs. And once that area gets wiped out, once they sell it and all those retail bidders are going to get washed out, look for a move. Look for a significant move beneath last week's low if, in fact, you trade beneath that level. That's an old breakout strategy that I've had for a long time, and it works. It works like a charm. Toughest part's just getting filled. But expect a move underneath last week's low. And if you find yourself holding longs underneath last week's low, you're going to have to figure that one out. I would just exit the market. That's for sure. Mibrahim. Good to see you. I hope I pronounced that right. Welcome. All right, guys, let's take a look at a few other things. There's a lot, actually, that we probably need to cover here, and let's go through it. We got that dollar CAD and the dollar yen that I want to look at, but the dollar CAD especially, and then we're going to go over a couple of fundamentals here. Remember, if you need to trade, check out Switch Markets. They'll get you involved. 100% credit bonus up to $5,000. This was the week that was quiet Monday, Tuesday. BOC and EI inventories yesterday. The Bank of Canada slashed interest rates. We'll talk about that for a second. Today, jobless claims and new home sales. That's huge. And then also Friday's durable goods orders. That's going to drive a little bit of action to the market, I would say, and give us an opportunity probably to trade more than likely. So let's just wait and see exactly what the durable goods come in, and perhaps we'll have a trade idea, or perhaps we'll be sitting on our hands. It's tough to say. Tough to say for tomorrow. In any case, the BOC, we definitely want to talk about this. BOC yesterday, they cut rates by 0.5%. That's absolutely huge. They went from 4.25 to 3.75, and they cited the reason why: progress against inflation. Right here, the BOC cut its interest rates by 50 basis points as expected, signaled it will continue to lower its rate should the economy develop as expected. Nobody knows what's going to happen there, especially Canada. Remember, fossil fuels, if those do go down in a big, big way, probably going to be in a precarious position. We'll talk about it later. The decision increased the pace of rate cuts following 3/4-point slashes, aligning with recent data that indicated a sharp slowdown in Canadian inflation. I would like to see somebody talk to Canadian consumers. Not too far from here. Canada's not too far from here at all. And I think that folks up there are tired of paying high prices too. So progress against inflation, I call BS on most of it. But it is what it is. That's what the experts say. And right here, more rate cuts. You can see right here, 2020, what happened? We were for about 1.8, went to 0.00, and then we had to get those rates way up there to try to control inflation. So typically, when you have an interest rate cut, what does that mean to the domestic currency? It means it's going to lose its puff. It means it's going to lose puff. So this month, right here, this month has been absolutely huge. Been absolutely huge for the dollar CAD to the top side, up about 2.5%. Now the reason why is multifaceted. Number one, that bearish market driver for crude oil is still very much alive. And remember, the Canadian dollar is a commodity dollar. It mirrors what crude oil does. When crude oil is way down, the Canadian dollar loses strength. When the crude oil is way up, the Canadian dollar gains strength. So when I'm looking at this chart, this looks to me like exactly Exactly what you would expect. BOC cutting rates by a half. It looks like the Fed's only going to cut rates by a quarter, and you have crude oil potentially coming down in a big, big way. You've got Trump ahead in the polls. You can see why this pair is on the march north. Now, what can we say about trading it? Well, right now I want to be long, but there's an area coming up where we need to be short, and I'll put out a formal trade idea here relatively soon, probably within the next hour. But your high right there is 139.77, somewhere in there, and your other high right there is what 139.46. So that area between 139.50 to 139.75 is going to be huge. And don't forget this area right here, which was also a monthly double top, 138.92 and 138.98. So 139 is huge. Up to 139.77. This area, I expect to fight. Now, I'm not interested in selling 139s. I'm not interested. But I'm interested in selling somewhere up in there. Check out the trade idea later. I won't give you a teaser, but it's going to be somewhere right around 139.50-ish. Not sure on the exact pip. I got to work a few numbers out. But that one right there, I think is going to be pretty good. Now, here's the caveat. If we break out above that zone, I expect this number to go very high. We're not trading at all-time highs. Markets have memory, guys. January 2016, what was your high? 146.89. How about this one? March 2020, what was your high? 146.67. Who was the president then? January 2016 to March 2020. You can see what I'm getting at here. Politics is really playing huge. Anything to do with commodities, they are watching the the U.S. presidential race and the U.S. Congressional race very, very closely, very closely. As far as what I think we should be doing right now with the dollar CAD, you want to be long. Any way you can get long, you want to be long. But do we have any levels? It's tough. It's tough. Look at this. Is just sort of a grind north. We still have some room up here, though. We're clearly in a bullish pattern. If you're an Elliott waiver, boom, boom, boom. So you get it. There's a 1, there's a 2, there's a 3. I don't think we've got into a 4 yet. Remember, 1s, 3s, and 5s move. So there's your 1, 2's a retracement, 3 is gone. I think the 3 continues. I would be looking to buy this thing any way that I could, even at current levels. And looks like we may get a chance. 4-hour chart, something like this. Spike low, spike high. All right. What would your entry point be? 138.46. Right now we're printing 138.49. I would be going long here. So if you want to pull out the trade, let's go ahead and just go at market. Let's go ahead and buy it. That's a market order. That's a market order. That just gets you long. So right there, you're looking to go long. Why would I say go long here? Because I'm not sold that you're going to get a big rally out of WTI crude, and I also think that cutting those interest rates is a big deal, especially against the Fed. So right now, a little bit of price action, but that 138.46 I'd be watching closely. Where would I get out at? I'm really big on quarter handles. I'd give this thing 25 cents, something like that. So I'd be somewhere right down around 21-ish. All right. What would my profit target be? It's got to be at least a 1-to-1 for me. I'd be looking at a 1-to-1. So if I'm long from 138, 138.50 was my entry. That's where I got filled. That's why market orders are trouble. 138.50, I would be probably right up here at 25. So we'd be right up there at 75. That would be the trade. That's what I would be looking at here. We're taking heat right now. I'm not too worried about it. If you actually wanted to go long right on the number, you could do so right here. But that's an interesting trade. We'll see how this one pans out over the next session. We may get swept out of the box right now. And if that's the case, that's the case. That's life. All right, we had a few other market drivers here to look at, and then a couple other markets. It's been an active daily news cycle. The title of this stream was Trading an Active, a huge news cycle, and I would say that it's been pretty big. Building permits came out. Those fell. Why would those fall? Because we see a big decline in mortgage applications. You also see mortgage rates creeping higher. We covered that really over the past 6 months. In any case, building permits are down, so that sort of is a signal of an economic contraction. But remember, we also are going into the fall months. Typically, that's seasonally. I remember when I was in the construction industry and we were building houses, one of the things that we would always do is scale back operations going in to the wintertime. You didn't want to be sitting around with a huge number of projects in action if, in fact, you were going into the winter months. You didn't want to sit on them until you had to sell them in the spring. something to think about there. Continuing jobless claims. This one's being lauded as just a huge victory, but you'll notice the continuing jobless claims, people that are still on the rolls, is higher than it's been. So people aren't dropping off of the unemployment rolls maybe as fast as a lot of folks thought. But take a look at initial jobless claims, 227,000 beneath 243. That's sort of being lauded as a victory today. They see that as being a real positive sign that the economy is growing and that the jobs market is remaining robust. I don't know about that. S&P Global Manufacturing PMI, these are what I call academic metrics. I'm not really interested at all in what they say because they don't move the markets. These are preliminary numbers. In any case, manufacturing up slightly there. And then down here, our services PMI is up slightly as well. So suggesting moderate economic growth. Those are what I call throwaway numbers. I don't care about them. They don't do anything for me. Okay, what else do we have here? New home sales. Now, that was interesting. New home sales is up. It's up significantly, too, and that's after the mortgage rates and all the applications and everything went down. Well, new home sales for September are actually up 4.1%, and that was after a dreadful August. That's interesting. That suggests that maybe some economic growth, the economy is a little bit stronger than what we think it is, what most people in the markets are anticipating. So I'm watching these numbers, these home sales, very closely. That's a leading indicator. And when home sales fall, you know that you're going into a recession. Natural gas storage came in at $80 billion, and we're seeing natural gas up about 2.17%. That's a big number for this time of year. We should have draws on supply, and we don't really have those. So this is curious right here. So a positive $80 billion, I would say that that's a pretty darn good number. Came in above expectations and above the previous release. That means that underground storage of natural gas did not decrease. That's a huge deal, especially going in to the winter months. And then our T-bills, our 4-week and 8-week T-bills, treasuries, the yields are holding firm, but they are down a bit week over week. That surprises me because the 10-year was relatively high. All right, let's get on to a couple more markets and we'll call it a day. Dollar yen, I wanted to point this out. This is sort of an area that I outlined a while back, and I should have revisited this one earlier. But monthly chart right there, spike high, spike low. There's your retracement, 153.50. What was our monthly high here? 153.18. I would still be a seller up there at 153.50. But right now, I don't know that there's any reason not to buy this market. And what do you have? You got a pretty good daily wave right there. I would be going spike low there to a spike high. And do we have some commonality? Right now, you're at 38%. Is this a hot trend? Well, I got resistance right up there. I don't really know if I want to. I don't know if I want to buy right now, but I will say this: right down around that key level, that monthly 50% level, plus a daily 62% level. That zone right there between 150.87 and 150.67, I would have that marked on my chart as being robust downside support. So if you do get a deep draw right here, and it looks to me like the dollar's losing puff right now across the Forex, if you do get a chance to bid down there, it's probably a pretty good bid. Probably not a bad bid at all. All right, everybody, let's see if we're going to get our opportunity maybe to sell. I mean, you can see here's our 9 EMA. We're still very much in overbought territory, so Euro USD 5-minute chart. You know, the game's simple for us, especially using these types of strategies. Just give me a bearish close. Give me a bearish close beneath the 9 EMA. We're in overbought territory. We sell the market. It's that simple. Stop loss above that previous swing high and just dial in your profit target any way you like. Could be a fixed risk versus reward. Could be a function of just the bars themselves. Depends on how you want to do it. If you don't know how to trade the 9 EMA, be sure to tune in. Go check out that YouTube video we put out a little while ago. Let's go ahead and check out our dollar CAD trade. Yeah, not too bad. We got a little bit of a strike, a hit, and a retracement off of 38%. So we're underwater right here. I do think the weakness in the dollar is sort of overstated right now, but we will see. We will see. We will see. Let me see. Universal. Hey, Shane, how about gold? Gold fall after the news release. Will the uptrend continue or fall around the 2,700 level and then continue the uptrend? I was to buy at the 2723 level buy zone, but I feared and missed. Yeah, I mean, you know, sometimes when you see a trade, you just got to take it. Covered gold right off the bat in the stream. Right off the bat. We had a trade idea out. If you're not in the trading room, go check the trading room out. You'll notice that we had a buy. We bid it at market yesterday from 27.15. Beautiful thing. It was a great rally. So right now, I mean, if I could ever figure out how to use this thing, something like this, 27.50, there's still sellers up there. So the real question is, what do we want to do right now? I would be waiting for 27.12 again and bid it again. I would wait for a strike on 27.12, though. I wouldn't bid 15s again. We caught that momentum perfectly. but I would want to rather be long than short. But for right now, I don't know that I would buy that market. I think it's a little bit too close to my 27.50. I would probably be looking to sell up there at 27.49-ish, 49.50, and look really to get that retracement. I think we're going to defend this level probably for the rest of the week. But listen, going into Friday's trade, anything that suggests there's going to be an attack by Israel on Iran is going to drive this thing up. And what's our next target? We'll get into this next week, but it's going to be you'll notice I'm skipping a lot of key numbers. I think that these are just going to be little skirmishes and retracements. I think the ultimate prize is going to be up there around 3,000. Once the 27.50 goes, 3,000 will come into play. So something to think about there. Will the uptrend continue? The uptrend's going to continue. I don't see gold fall. This isn't the top of the gold market, believe me. It's not. The market drivers are all bullish. But where do you get in? I have no problem taking scalps down here. You know, if you were going to take a position, we would pull a weekly and see if we could get a deep pullback, maybe into the 26s or maybe a monthly chart. You know, something right down around this swing low. You know, you'd love to maybe get long down there to take a position. But for right now, we're just sort of retail scalping. So if we get a chance at, 27, 13.50s, something like that, I think you take the trade. All right, everybody. That's it for today. Pretty interesting stuff. Right now. I'm watching the election. We're only about 10 days out, 12 days out, and that's the number one market driver in the world. We expect a retaliatory strike from Israel on Iran really any time, but with the election and everything, we just don't know when it's going to come. We just don't know. All right, I'm going to have a trade idea out a little bit later today, probably within the next hour, so be sure to check it out. It's going to be facing that dollar CAD, and we'll give some exact levels there, but I really like selling that dollar CAD right up around that triple top there. I think we're going to be in pretty good shape if we do that. Mark Corp, absolutely. You're welcome. All right, everybody. Thanks for joining me. Trade Day, Universal, Dibble. All right, guys. You guys have a fantastic day. Finish up your trading session strong. We'll see you back here tomorrow. Should be an interesting day. I don't think tomorrow's a no-donation day. I think it's a pedal to the metal, and we're going to trade it. All right, Brent98, good to see you. All right, everybody. Thanks for watching. Boy, there's a lot to cover. There's a lot going on right now. Tomorrow, we're going to talk about how to trade the Fibonacci counterpunch strategy. That's my personal strategy, and we're going to go through how to trade it. We'll also cover some news as well. All right, everybody, thanks for watching. Trade the action well, and we'll talk soon. See you.